Picture this, it's 2015. The world is buzzing with new technologies, social media is taking over, and a new form of digital currency is starting to gain traction. And you have a spare 100 burning a hole in your pocket. What do you do with it? You could treat yourself to a nice dinner at that new restaurant everyone's talking about, or maybe buy that new video game or board game you've been eyeing, or take a chance, a leap of faith, on something called Bitcoin. Back then, it was still largely unknown, shrouded in mystery, and considered highly speculative. Fast forward to July 2025, 10 years into the future. That 100 you almost spent on dinner or a game, it's now worth over 40,000. Yes, you heard that right. This isn't some far-fetched fairy tale. Bitcoin's growth has been absolutely staggering, defying expectations and delivering a return of over 41,000%. For every single dollar you invested, you'd have over 400 back in your pocket. It's the kind of investment that has the potential to transform pocket change, those small, seemingly insignificant amounts, into truly life-changing wealth. Now, let's take a moment to compare that incredible performance to the S&P 500, widely considered the gold standard for long-term, reliable investing. If you'd put that same 100 into a well-diversified S&P 500 index fund back in 2015, you'd have a respectable 298 today. That's a solid and dependable return, nearly 200% growth, but it simply pales in comparison to Bitcoin's meteoric and explosive rise. The difference between the two isn't just big, it's a massive chasm, a Grand Canyon-sized gap in performance. This certainly doesn't mean that stocks are a bad investment. In fact, for the vast majority of people, they're still the safest and most prudent path to building long-term wealth. But Bitcoin has undeniably played in a completely different league, pushing the boundaries and redefining what's truly possible in the world of finance. It's a powerful testament to the potential rewards of being an early adopter, taking calculated risks, and having the conviction to hold on tight through a truly wild and unpredictable ride. Year after year, across the ever-changing landscape of global finance, one asset has consistently turned heads and sparked conversations. Bitcoin has outperformed every major asset class, from traditional stocks and bonds to real estate and commodities. It's not just a little bit better, it's often significantly better. Between 2012 and 2023, a period encompassing diverse economic conditions and market cycles, it was the best performing asset in 9 out of 12 years. That's a remarkable track record of consistent market dominance. While the S&P 500 celebrated double-digit gains, which are generally considered a sign of a healthy and thriving stock market, Bitcoin often delivered triple or quadruple-digit returns. We're talking about exponential growth that dwarfs traditional investment opportunities. In 2024, the S&P 500 gained 24%, a great year for stocks, showcasing the resilience and potential of established companies. But Bitcoin soared 135% in the same period, leaving traditional investments in the dust and highlighting the immense potential of digital assets. This isn't a fluke, it's a pattern. A recurring theme of Bitcoin outperforming traditional markets over extended periods. But with those highs come wild lows, a roller coaster of price action that can test the resolve of even the most seasoned investors. Bitcoin's volatility is legendary. It's a defining characteristic of this digital asset, a double-edged sword that presents both opportunities and risks. A bad day in stocks might mean a 2% drop, a manageable dip that most portfolios can easily absorb. Bitcoin can swing 10% or more in hours. These rapid and dramatic price movements are not for the faint of heart. In years like 2014, 2018, and 2022, periods marked by significant market corrections and economic uncertainty, Bitcoin crashed by over 60%. A stark reminder of the inherent risks associated with investing in this volatile asset class. Yet, over any multi-year period, when viewed through the lens of a long-term investment strategy, patient holders have seen massive gains. Those who weathered the storms and held onto their Bitcoin have been handsomely rewarded. The lesson? Bitcoin rewards patience and nerves of steel. It demands a long-term perspective and the ability to withstand significant price fluctuations. It's a high-stakes game, a thrilling and potentially lucrative arena for those who understand the risks and rewards. But the long-term trajectory has been relentlessly upward. Despite the volatility, the overall trend points towards continued growth and adoption. Why is Bitcoin so volatile? It's still young, just over 15 years old. Unlike stocks, there's no long history or established value anchors. The crypto market runs 24/7, reacting instantly to global news and rumors. Prices are driven by supply, demand, and investor psychology, not company earnings. A single tweet or headline can spark massive swings. But volatility is a double-edged sword. It creates both risk and the potential for huge gains. For long-term investors, every crash has been a new buying opportunity. Bitcoin's story began in 2009, launched by the mysterious Satoshi Nakamoto. At first, it was a niche experiment with no real value. The launch of Ethereum in 2015 changed everything, introducing smart contracts and opening the door to decentralized finance and NFTs. Today, the crypto market is worth $2.7 trillion with over 25,000 cryptocurrencies. Major milestones like Bitcoin ETFs and new all-time highs have brought crypto into the financial mainstream. What started as a fringe idea is now a global force, attracting corporations and even governments. The digital asset revolution is well underway. What sets Bitcoin apart? Scarcity. Only 21 million will ever exist. Unlike dollars, Bitcoin can't be printed at will. Over 90% are already mined, and new supply halves every 4 years. It's decentralized. No single person, company, or government controls it. Anyone, anywhere can use Bitcoin 24/7 without a bank. You can hold it yourself, like being your own bank, or use an exchange. This combination of scarcity, decentralization, and global access is Bitcoin's secret sauce. For people in unstable economies, it offers financial freedom. It's a new kind of money built for the digital age. That's why it's become such a revolutionary asset. By the way, don't forget to subscribe and like this video so I can make even more videos tailored for you and keep you informed. Bitcoin's real power doesn't just lie in its innovative technology or its decentralized nature. Its true strength comes from its growing adoption on a global scale. As more people and businesses embrace Bitcoin, its value and utility increase exponentially. As of 2025, the numbers speak for themselves. Over 560 million people worldwide now own crypto assets, demonstrating a significant shift in financial behavior. This represents nearly 7% of the entire global population, a figure that underscores the increasing relevance and appeal of cryptocurrencies in the modern world. Emerging markets like Vietnam are at the forefront of this adoption wave. India and Nigeria are also leading the charge in crypto usage, showcasing the technology's potential in regions with unique financial challenges. Many in these regions are using crypto as a vital tool to protect their savings against inflation and currency devaluation, highlighting its practical benefits. In the US, the story is equally compelling. Over 50 million adults now own crypto, indicating a growing acceptance among mainstream investors. Crypto is no longer a niche asset. It's increasingly becoming an integral part of mainstream investment portfolios, signaling a shift in how people perceive and utilize digital currencies. Businesses are also joining in, recognizing the potential of Bitcoin and other cryptocurrencies. Currently, over 6,000 businesses accept Bitcoin as a form of payment, demonstrating its growing utility in the commercial world. This includes tech giants like Microsoft, who are embracing the future of digital payments, and PayPal, a leader in online payment processing, further solidifying Bitcoin's place in the financial ecosystem. Companies like MicroStrategy are taking it a step further, and Tesla are strategically holding Bitcoin as a treasury asset, viewing it as a valuable addition to their balance sheets. They are betting on its long-term value and potential for growth, signaling confidence in its future. This combined embrace from both corporations and individuals is fueling a powerful network effect, driving further adoption and innovation. Bitcoin is rapidly moving beyond its initial perception as a speculative asset. It's evolving into a real, usable global currency with the potential to transform the way we transact and interact with money worldwide. The biggest shift? Governments are getting involved. El Salvador made Bitcoin legal tender and holds it in its treasury. In 2025, the US announced it would keep seized Bitcoin in a strategic reserve instead of selling it. Other countries like Bhutan and Switzerland are exploring or accumulating Bitcoin for national reserves. US states like Wyoming and Texas now allow Bitcoin in state treasuries. When governments and central banks hold Bitcoin, it adds legitimacy and stability. This trend could help reduce volatility as more long-term holders enter the market. Sovereign adoption marks a new era for Bitcoin's evolution. Bitcoin's market cap is now 2.4 trillion, making it the fifth largest asset on Earth. It's more valuable than Amazon, Google, and even silver. Only gold, Microsoft, Apple, and Saudi Aramco are bigger. For Bitcoin to match Apple, it would need to hit 142,000 per coin. To match gold, it would need to reach over 1 million. Each milestone grabs headlines and drives more adoption. Many see Bitcoin as digital gold, a 21st century store of value. Its rapid rise has forced the world to pay attention. So, could Bitcoin hit 1 million? Many experts think it's possible. Short-term targets for 2025-2026 are 150,000, 200,000. By 2030, models suggest 500,000 to 1 million isn't out of reach. The logic: fixed supply, rising demand from individuals, corporations, and governments. Risks remain. Regulation, competition, and volatility are real threats. But Bitcoin has already outperformed every asset class in the last decade. It's gone from experiment to global store of value, embraced by 500 million people. Whether it hits 1 million or not, Bitcoin has changed the conversation about money, and its story is just beginning. Crypto Inspector is out.